We invite into the stream Jonathan Golub, Credit Suisse Chief U.S. Equity Strategist. Good to have you here. Several things to talk about. We've got the Fed purchasing corporate debt via ETFs, and eventually they're going to go even further. But I want to start with one thing you've pointed out, that 23% of companies will deliver an increase in their earnings per share growth in the second quarter of 2020, year over year at least. Why do you believe that's going to happen?
Well, first of all, the estimates that we're using are based on consensus numbers. So it's not Credit Suisse that thinks this is going to happen. These are thousands of stock analysts who are looking at companies bottom up and making that determination. But the real key story here is there's not one monolithic stock market. These are, in the S&P 500, there's 500 companies. And, a substantial portion of them are actually seeing profit growth. Now, these tend to be in areas related to tech and other non-cyclical parts of the market like healthcare, consumer staples, which have not been harmed by what's going on. Now, there's also about 15% of the market that's actually expected to see profit losses or economic losses to their businesses, and those tend to be in areas that are quite cyclical. These would be auto companies and energy companies and restaurants and hotels and things that we're hearing so much about. And the reason the market is so bifurcated between these winners and losers is because they have very different economics.
Hey, Jonathan, it's Julie here. At the same time that we are seeing that bifurcation, we are also seeing, as Adam mentioned, the Fed come in and buy corporate debt through ETFs. And of course, that's not all the Fed has done. The Fed has been very supportive here in terms of providing liquidity to all kinds of different companies and entities. So is there also sort of a support under the market as a whole as a result of these kinds of actions? Or do you think that it's still going to more advantage the companies that you're talking about that are on better footing?
No, Julie, I think there's really two stories here. The first is what's going on between individual stocks and within the market itself. And the second is the market broadly. I would argue that the Fed's purchases of bonds, and it doesn't really matter whether they buy the bonds directly or they buy them through an ETF. They're ultimately buying up corporate debt, and that backstops equities. So this is a very important thing, and you can almost think about it as if the fundamentals of the economy are quite weak, and they're likely to stay weaker than we all want to believe for the next quarter or two at least. And yet the market's going up partially because the Fed kind of has their thumb on the scale, providing a boost. And the boost that they're giving is not going to be towards the healthiest companies that don't need it, the companies that may be growing or have flat earnings growth. It's those companies that are in much more precarious situations that, if not for the Fed, may be down substantially more than they already are.
Hey, Jonathan, it's Julia LaRoche. I want to kind of go off that point you just made, that the fundamentals in the economy are weak, yet the market has still been going up, and partially because of the Fed moves. Yet it makes me wonder, are the markets pricing in kind of an almost impossible case recovery scenario from the pandemic at this point?
Well, I mean, I think that there's a number of underlying issues. The first one, if you actually look at what was predicted in terms of the progress of the virus and the infections and death counts and things like that, the predictions only a few weeks ago was that we would have already peaked and that this would be rapidly moving towards effectively a zero death rate in places like New York, but in most of the country. And instead, what seems like is happening, and I think we're going to hear about this from Fauci and others today in front of Congress, is that we appear to be plateauing at a higher level of about 2,000 deaths a day, and that's not meaningfully coming down. The benefits, the improvement that we're seeing in places like New York are not playing out elsewhere. And so I think this is going to mean that this whole discussion of, is this a rapid V-shaped bounce? It may have been a V-shaped bounce in the stock market because of the Fed and the policy response. but I don't think you're going to have a V-shaped bounce in the economy if people are afraid to go back to work and go out to a restaurant or the like.
Jonathan, Neil Kashkari, the Federal Reserve Bank president in Minneapolis, has actually just said that it's more likely, this is a quote, more likely based on what we know, a gradual muted recovery. We're not going to fix our economy until we get our hands around the virus. It's that comment about the virus. We heard from Fauci not too long ago, not an exact quote, but essentially that the rush to produce a vaccine may actually create more problems in the long run than they cure. And yet, Schwab, or at least Credit Suisse, put out the note in which second quarter 2020 earnings per share for a lot of the health companies is looking pretty good. Does Fauci's comment jeopardize that?
I'm not familiar with the comment, and I don't quite, just listening to the way you're describing it, see how our desire to get a quicker vaccine, or therapeutic is in some way, a bad thing. Obviously, we need to move through this. He's also commented, which I think is correct, that you don't get, you could try as hard as you want, but we're really right now only, 8 weeks into or so this self-quarantining or shelter-at-home process, and this is going to, potentially take a while. So the more that, right now the market seems a little bit disconnected from that. The market believes that we're going to quickly, maybe, June 1st, we'll all be getting back to a normal routine. And I think that the comments you made were right. We are going to step forward into a renormalization process. But right now, we don't really have guidelines on what does it mean for kids to go back to school? What does it mean to go into an office building with an elevator with a whole bunch of people very close to each other, or to commute by train? And for those of us who are on air right now, many of us have to commute in, using the train or the subway. Until we really have a sense of that process, I think this is going to be somewhat precarious, which is why it's also so amazing to see that the volatility of the market has been coming down so meaningfully. And so the only logical explanation is that it's not the conditions that are really dictating. It's this huge government response, which is it's nice to see, but it has its own side effects.
So, Jonathan, to come back full circle to what you were saying in the beginning, and this sort of bifurcated market between the areas that may be more resistant or more resilient in this, to put a fine point on it, do you think people should be buying those areas or just kind of holding on in those areas? I mean, you think you mentioned hardline retail, insurance, sectors like that.
Yeah, I think that those areas of the market that are healthier are going to continue to be healthy. That doesn't mean that if the economy is weak, that online ad sales will be a little bit softer, or that we may go out and purchase something a little bit less of something, but those areas like consumer staples and food items and cosmetic items or personal care items and even, the use of technology, which in many ways is increasing while we're at home because we're communicating, digitally with each other and the like. Those areas, if they appear reasonably healthy, I think that there's no reason why you can't be putting money in them. There's a reason why the NASDAQ is actually up year to date. It's not just speculation. It's a group of much healthier companies that are vibrant, and the stock prices are reflecting that. Not just simply, it's not only a safe haven. Many of these are very good stories.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.